I'm William Grantham with IchimokuWeather.com, and on Nike we have a Kumo Breakout. We are looking at the Ichimoku Kinko-hyo technical analysis system that has this shaded area that is called the cloud. And the cloud is translated from Japanese. In Japanese it's called the Kumo. So whenever you have price coming up out of the cloud, it's called a Kumo Breakout. And that's what we have on Fridays. Let's take a look at the positives for this situation. We did move into the cloud, but we didn't go below it. We had a peek out from beneath right here just a little bit, but we stayed inside. And then we moved up and got above the blue line and above the red line. And then we had a nice breakout. The breakout was on above average volume. We'll take a look here, and we see that it did poke above the little black line just a little bit. Whenever you see these lines going above the black line, that is above average volume on a 50-period time frame. Out of the last 10 trading days, we did go above average volume 6 times, and that is another good sign. Our lagging green line is market action plotted 26 periods in the past. It can have support and resistance, the same as price action, and it also can be an anchor on price action. It is a good sign when the green line is above past market action and the lines and the cloud. We call this free and clear, so right now the green line is free and clear. We can see here its cone of possibility, and there is a little bit of market action in front of it, but if this continues to go up and the green line is able to get up and above this particular market action, then it's going to be really free and clear and not have too much in front of it as a possibility of slowing down current market action. So that shows that the momentum behind this is accelerating. On the negatives, we do have the blue line is below the red line. The blue line is angled up. It looks like it is about to go above the red line, but it's not quite there yet. So whenever you have the blue line below the red line, that is a bearish situation. You can wait for several things to get into a Kumo breakout. You can wait for an open or an open and close above the cloud. You can also wait for the blue line to get above the red line, or you can purchase on the market open of the next trading day. Another negative is in our future cloud, we do have a Kumo twist where we twisted from the green to the red, and we have a bit of a red cloud in front of us. That is a negative sign. There is also a possibility of market action going through the cloud where it is thinnest. This is also a weak point in the future as dictated by the Ichimoku Kinko-hyo cloud. If your trading plan used a 1-to-3 risk-to-reward ratio and your maximum amount of risk was 10%, then let's see where your stop would come out. 10% below our current amount is $130.60, so we'll put a line in at that point. And then our target would be 30% above, which would be at $188.64. We'll pull down the chart here to be able to see where that's at, and now we can see our 30% line above us. Let's take a peek over on the weekly and see how this stacks up. And we can see that here is our stop at 30% below the market action on the weekly. Now, what's negative about this is the previous week did go down below this point. What is positive about this is we do have the blue line above the red line, and this is a large bearish channel that is hopefully going to continue. The red line is angled up. However, the blue line is flat. So it would be nice to see the blue line start to angle up and stay above the red line. Our lagging green line is free and clear here on the weekly and has been for quite a ways. And our future Kumo is getting bigger and fatter, and that is another bullish signal. Now let's jump down to a 1-hour chart and see how things are going there. On the 1-hour chart, we can see our stop is down here below the cloud. We can see on the 1-hour chart that we do have a bullish channel that is going on. We are also above the black line. That is our 200-period simple moving average, and it's always good when we're above it. That is a bullish signal. And we also had a nice Kumo breakout here on the 1-hour. When we had the Kumo breakout on the 1 hour, it was on above average volume. It was also on the first hour of the trading day. And as you can see by these little peaks here, we are having above average volume on the first of the trading day and at the end of the trading day. And then you also can see here on the last day, we did have quite a few hours that were above average volume. And that is a good sign going into a Kumo breakout. A little bit of momentum going on there. The lagging green line on the 1 hour is free and clear and does not have any kind of market action to weigh it down in front of it, except for what's going on in here at the Kumo Breakout several days ahead. The forecast on the 1 hour does show a big green cloud that is getting bigger, and that is another bullish sign. So here on the 1 hour, in between where the current market action is and the stop, you have both the blue line, the red line, the 200 period simple moving average, and the cloud all showing as supports in between current market action and the stop. On the daily chart, we have the top of the cloud, the red, the blue, and the bottom of the cloud as support in between current market action and the stop. And then even on the weekly, we do have the blue line that is support in between the top of this candle and where our stop is at. Let's take a look at the sector just to see how our environment is. Nike is in the consumer cyclical, so we will use the ETF of XLY. And we can see that XLY is in a bullish channel, and it has made a new highest high. So this is another good sign that could possibly help Nike continue with its bullish breakout. We do have a lagging green line that is free and clear, and our future cloud is green and is slanted up, which is a good sign showing that we do have support underneath the cyclical ETF on the daily. Here we are on the Nike daily chart, and if you're using a 1-to-3 risk to reward ratio and you have a 10% stop, you can see where the stop would be at $130.60, and that's with the current market action. If market action on the next trading day opens higher than that, and if you have a market order set to buy on the open, you might be buying above this point, and you'd have to move your 10% stop up to where it would be equivalent to the current market price that you got in at. And right now, if looking at the current market price, our 30% target is up here at $188.64. So you have to make a decision on if you believe that Nike can get up to this point at some time in the near future. I'm William Grantham with Ichimoku Weather.com reporting in on this Nike Kumo Breakout.